Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and Tulsa markets. It's been a bad week for rates. It's been a bad month for rates, and maybe a little bit longer. Again, the war in Iran, with Iran is just really causing terrible problems. The Straits of Hormuz are still closed, and the Houthis just attacked a tanker that Saudi Arabia had in the Red Sea. So this has caused things to explode a little bit. It kind of eased up just a hair, but the thing is the 10-year Treasury crossed the 4.6 and actually briefly crossed the 4.7% rate. And that's a bad harbinger. That's a bad omen when it comes to interest rates. And so rates have really gone up quite a bit. And so, getting things below 6% right now for investors, extremely difficult. Even for owner occupants, it can be a problem. So, what do we think is going to happen here? Well, essentially, the longer this war goes on, the worse this can be. And the thing that I want to emphasize to real estate investors right now, wherever you are, wherever you're investing, is look for the national builders at this point, because what they are doing, especially the D.R. Hortons, the Lennars, the really big ones, is they're spending millions upon millions of dollars on this forward commitment program where they can get a Fannie Mae backed loan for a whole lot cheaper. They're paying a lot of points. So to kind of give you an idea, I can get, with D.R. Horton, with they have a buy down that they're going to give you, an allowance they're going to give you. Lennar is going to give you an allowance. We can get down anywhere from 5.375, even all the way down to 5%, fixed rates, 30 years, 25% down, whereas you're paying at least 1% more if you're going with your standard mortgage company. And so these kind of things are really keeping the market going nationwide, and it's making a real difference. Our investors are hopping all over it. So here's the thing. I want to emphasize it is a buy now strategy. Why do I say that? Well, let's take these forward commitments before the war started. I had a fixed rate that I could give you at 5.375. It was 4.5. Then it went to 4.625. Then it went forward to 4.875, then 5.125, 5.375. Once this money is gone, they have to buy it again based on current rates. And so what that's going to mean, that 5.375 with Lennar, the 5% with D.R. Horton, it's going to go away. It is going to be higher, probably about 3/8 of a point, mainly because of the way things are going right now. So, when this money runs out, and we don't know when it's going to run out because this is nationwide, you're going to be paying higher rates. Right now, we've got some incredible deals, discounted homes, well-priced homes. I got one home at $244,900. That's $400, $500 a month positive cash flow with 5.375. That's still going to be good, but then I've got some that are $150 or $200. It's really going to be affected. So if you're a real estate investor and you're looking long term, in other words, you're going to hold this 10, 15, I've got people, over 20 years holding their homes. Get at these low rates now, because we don't see an end of this war anytime too soon. And even if that happens, we don't know what the results are going to be. We don't know if the Straits of Hormuz are going to be opened up again. We don't know how long it's going to take for oil prices to go down. So inflation and rates is here to stay. So what I'm trying to tell you is buy now.